Vikash Kumar Jain of CLSA has come up with its note on Indian markets, where he says that the Indian markets may be vulnerable for a pullback. With the kind of a rally that we have seen in Nifty, he says that the Nifty is near 16-year record high in terms of sentiment, momentum and valuation print. And along with this, CLSA's proprietary India Bull Bear Index, which tracks the India equity market sentiment, and CLSA has compared it with the results over the last 16 years, suggests a very bullish extreme as of now, with over 99% bullish reading that was observed at the close of 17th of September, marks CLSA. Historically, they do highlight that such high readings have warned a large pullbacks, but this time the global market sentiment is not as stretched yet. From the past, they say that the index hit a record high in early January that was signaling some kind of a peak, and this was followed by a quick 8% fall ahead of the budget. But then corrective action continued for over 2 months after a sharp pullback rally that was seen post-budget. And then similar sentiment index levels occurred in the early June. This was followed by nearly 6 to 8 weeks of sideways corrective action for the Nifty. But this time, the kind of a rally that Nifty is seeing, that has definitely got Nifty to record levels, not only in terms of the absolute valuation, but also in terms of the relative valuation when we compared the current Nifty valuation to the other emerging markets especially. And now India is the only market at near 20-year high momentum results, even as the global markets and the risk assets have been a bit tentative going into the Fed meeting that's lying this Wednesday. Now, Indian equity markets, as per CLSA, appears to be less prepared and more vulnerable to any kind of a negative developments that could come from the Fed meet linked to tapering or tightening. And now talking about the sector, CLSA adds that till now the rally has been led by the defensives such as ITs, and going forward they feel that as risk assets rebound after suggesting that the tapering related news could be digested by the markets, they expect that the cyclicals such as banks and commodities will retake the lead from the defensives in India. And something on similar lines we saw yesterday coming in from Lawrence Blanco of CLSA, who is the technical expert over there. He also said that he would like to move his weight from IT to banks, and he prefer banks even more for any kind of a rally lined ahead for the markets. But overall, he is not that bullish on the markets as well. So in the past 2 days, we have 2 top analysts of CLSA who are not at all positive on the markets from the current levels, but feel that banks still have the steam to move upwards while IT can take a back seat. However, on the closing comments from Vikash Jain, he says that the overstretched reading on most of the parameters for the Indian markets increase their concern that a handover from the defensives to cyclicals could cause a short-term disruption for the Indian equity markets, or they could also witness a prolonged consolidation. So that was the take from Vikash Kumar Jain of CLSA.